But yeah, I wouldn't have any super high expectations for that. Um, but yeah, that's kind of what we saw today. Again, we did see some end of day buying, which was felt a little bit out of the ordinary. But sentiment from here extremely weak, right? We've definitely put a dent in the positive sentiment. Who knows? It could end up getting bought all back as it's done with most of the other major dips that we've seen recently. But I kind of believe that we've input a good pivot point, and I think we can continue to short and risk against this 5,000 area over the next couple weeks if it's offered again. But I've got some major downside targets. I've listed them all in my outlook that'll be posted here after this session. Um, but yeah, me, myself, Mo, and Huji, we're all on that board that we've kind of gotten a bit extended. Risk to reward favors shorts, and now we've got somewhat of a decent catalyst and fundamental reason to actually be looking for downside. So that's kind of where we sit, and that's where a lot of the positioning has come from on Hoosier's side. If you guys have been reading any of Mo's chat, he's been kind of talking about it for a week or so now. And then on top of that, Hoosier has been kind of touting as well, nothing but shorts for the foreseeable future. Um, but yeah, today was awesome. High volume. It's nice. Thankfully we were able to get some volatility back in this market after what feels like forever. Um, so if volume can sustain, I personally don't care where we go, up, down, or sideways. Just so long as volatility stays around, it should be a good time to trade. But yeah, that's about as much as we can cover in that aspect, unless you guys want to go a little bit more detailed or have any further questions on that. Anyone?
I mean, I guess it was a pretty great explanation about what happened today on most of the points.
Yeah. Yeah. Are you pretty experienced, my man? Have you been trading a while?
I mean, I've trained for 2 years, but I've had ups and downs versus everyone. Right now, I'm switching to full time,
Oh
so
wow.
it's kind of like a really important point for me. Yeah.
Congrats, man. Congrats. So you've definitely found a good bit of success then, yeah?
Well, I mean, yeah, I can say that strategy that I'm using with seeing based volume and such as well, but still trying to sharpen that edge.
Course, of course. Yeah, I personally couldn't trade without VIX. Um, I use it extensively in my own analysis, and I'm if there's two things that will never leave my chart, it's this one right here, ES, and the VIX. So I use them extensively in my analysis, and if you trade volume, you'll find a very comfortable home in this group. But yeah, is there anything you want to check out, man, or anything you want a second opinion on, or just general questions? I mean, if you've got 2 years under your belt, I'm not sure I can give you much other than friendly conversation. A lot of these sessions are just like I said, just general questions, more kind of review, you know, looking at charts, etc. But um, if you have anything, shout it out, man. I'm gonna be honest. I'm pretty surprised. These sessions we typically poll anywhere from you know 9 to 15 people. The fact that we've got just you and Dorit in here is kind of mind-boggling to me right now.
It's just a surprise. I was just about to decline it, so I don't know.
Yeah, it's okay. It's okay. But yeah, I mean, I let everyone know the time, and typically the turnouts are a lot better. But let's see if Captain wants to look at anything. What's going on, Captain? How's your day going? How you doing, man? Doing good, doing good. How'd you do today?
So CI is one of the only thing that's day versus it being down 2%.
It's a great question. So that whole entire sector right now is extremely personally, I'm gonna be 100% honest with you. I think that whole semi sector right now is a bit of a bubble. If you look at Nvidia, it's now the fourth largest company in the US. It has now surpassed Amazon in market cap, yet it does less than less than a 20th of their revenue. Okay, it's they're pricing in growth. They're okay. So if you look at their growth, don't get me wrong, it's remarkable. They're growing at an extremely fast rate, but people are expecting them to continue growing at this rate, and they've priced in 20 years of that growth with this valuation. It's absurd. It's ridiculous. Don't get me wrong. AMD and Nvidia are companies that I personally plan to hold forever. I've got them in my long portfolio. I love them to death. But even I'm looking at this thinking, okay, I've reduced some size. This is a bit ridiculous. But anyways, the whole sector is a bit bloated at the moment. And they've all reported very strong recent earnings. Okay. And Nvidia is the leader of that sector. So the reason why Nvidia and SMCI were both likely green today, ARM got a bit of a correction. ARM definitely sold off a good chunk, but AMD, ARM, or AMD, SMCI, and Nvidia all saw green days today, and I've got one reason for that. It's because Nvidia still hasn't reported earnings. They're all just waiting around, waiting for that big Nvidia earnings. Oh, and he left? The hell? All right. Interesting. He'll be back in a second, I'm sure. Anyways, Breadman, how's your day going, man?
Trying to get this thing fixed. It's all right, man. I didn't get the trade today. I missed out.
Ah, sorry to hear, man. Today was awesome. Lots of volume.
So I was listening. Streets. And I wasn't able to watch. I'm off all day tomorrow, and maybe something come up.
Okay, sure, man. Yep. Let me know if you have any questions.
We should speak now. I didn't want to get launched contact. Like 500 texts. It's like that. I wasn't sure. Granted, they worked out nicely, and they were had plenty of time on them where it just held on to them. I couldn't monitor it, and with that size, I didn't want. I was a little nervous about it, so I just sat on my hands.
Yeah, that's fine. Honestly, I mean, my long-term shorts paid out nice today as well. Of course, that end of day rip kind of put a little wrench in that, but yeah, today definitely was awesome for the long-term shorts. I've personally got, I don't know if you're in the Junes with him, but I've got December dated contracts, and those ones didn't make as much as the Junes, obviously. But yeah, it feels really good to finally get some green on those. I started entering those back here around beginning of February, back when we were fighting this 5,000 area. So I even got an ad in yesterday. I even added when we popped over this 50-50 area. So today I'm feeling really good about those. But yeah, I've got all the way to December. I expect if any correction, it's probably not gonna be tomorrow. It's not gonna be over the next week. It'll probably be a long-term event. But yeah, personally I'm more hedged for downside at this point. Yeah, yeah, it's just a correction. And like both Mo and Huji have said, a standard bull market correction can easily be 10% and nothing will be wrong with the general trend. Well, guess what? 10% from the high we made is all the way down at 456. That's way down here, you know? And if we get that move, shoot, those long-term shorts will be very, very, very profitable. So again, we've made this move. This was December. This was mid-December here, and it's mid-March or mid-February. It's been 2 months. You're telling me we can't get all the way back down to 460 in 10 months? It's very likely. It's very possible, and it could be a totally logical, very healthy pullback. I'm not, yeah, we're not calling for the end of the world here or anything like that. It's simply just a, kind of overweight type action, just a minor correction based on some, you know, nothing really even has to break. This is a perfect example, right? CPI came in hot, and that's,
500 points.
yeah, 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 yeah. Like today is a perfect kind of fundamental reason, right? With CPI coming in hot, it's pretty much all but guaranteed that we are not getting a rate cut in March, right? And so I was mentioning to these guys earlier, that has bigger implications. So we're not getting a rate cut, which is like I would say all but certain. they might pull something out or whatever, or give some excuse for a rate cut, but I don't think that's likely. I think there's a very, very, very confident chance that there will be no rate cut and rates will remain unchanged. So you add that to the fact that the BTFP program is ending for regional banks in March, we're going to see a lot of stress on these regional banks. And if the financial sector goes into more stress and we start to see more closures due to liquidity issues, that could be another thing that, in quote, breaks that, causes some fear across the general market and sends us lower. Right. And so El Sucio, I got to give him credit. He's been the one who, for the past month, 2 months, has been chirping about the BTFP program, saying, you got to watch out for this. You got to watch out for this. If we don't start to cut rates soon, these regional banks are going to be in danger. And now here we are. Now that a rate cut has pretty much been ruled out, it's all I'm seeing. It's all I'm seeing on Twitter. Is everyone's talking about, okay, shit, be cautious of the regional banking sector. They're going to be in trouble now that a rate cut is not on the board. So that's primarily what I think could be the big catalyst to send us lower, is if we start seeing a lot of regional banks start to see some stress. But yeah, today, the CPI coming in a little bit hot isn't a huge issue. It's the implications that it has that starts to arise some worries. Um,
Right.
but yeah, anyways, I
And
was
over like Meta,
what's up, AS82?
right. So just looking at Meta, um, it kind of tried to fight the sell off. Then towards I think after 3 o'clock, actually fell down to like 2% and ended at one point something, 1.7, 1.8% for the day. Wanted to see your take on see a rebound potentially.
Oh, I wrote a whole planned play on Meta. Um, just No, you're totally fine. We'll circle back to the Fed and the CPI stuff in a sec, but Meta, basically, I wrote up a plan play. I'll keep it short just because there is a write up on it. But yeah, we gapped down today with the rest of the general market after failing to work through this 470 level. We did find buyers off the 455 spot, and that has been respected since we've gapped up. This is basically the last line in the sand that's protecting us from a fall into this liquidity gap here. Um, Granted, it's being held up. It's built a range from the earnings, so I mean it's got a fundamental reason that warranted an increase in price. And all else aside, if I wasn't expecting poor market sentiment, this is not a name that I'd typically be looking to short just because of how amazing that earnings was, right? You've got the dividend reintroduction, you've got the buyback program, you've got the positive EPS and everything. Like, of all the names that gapped up on earnings, this one was the most deserved. So I mean, if anything, the only reason I'm looking for downside is purely technical based and kind of correlating that back to expectations of a weak market, a general weak market, right? If market rebounds tomorrow and we buy back most of today's sell off and we kind of just go back to market seeing upside, I'm not going to want to short this thing at all. In fact, I would think, okay, this 55 level is a great spot to risk against because, your risk to reward is, let's say if you are playing longs on it, your stop loss is what? A significant break under the pivot lows, right? So you're risking maybe max $3 or $4, but your upside is, you're looking for 470 at the minimum, you know? So, I mean, your risk to reward on this trade from longing 55 is super positive. So, again, if market sentiment wasn't weak and I wasn't looking for downside across the entire market, this isn't a name I'd be wanting to short. It's purely from a technical perspective, right? So yeah, it's basically just 455 here. If market sentiment's weak, I have alert set for a break under 455, and I imagine we could probably get this thing back down to maybe 440, 445 area, and that would offer us a nice clean day trade or multi-day swing. I'm not looking for the whole gap to be filled. I don't think that that's warranted. I'm not expecting any of that, but we've got an empty gap here, and a flush paired with poor market sentiment could easily give us a very clean trade to kind of find an area to start building a new volume shelf under this.
Terms this, this for tomorrow to prove we're a strong market.
Well, it's not gonna happen overnight. It's not gonna come, one day's action is not gonna change my sentiment. I mean, like I said, I've given a few reasons why I think, you know, we could see a change of trend, but for now, there's nothing that tells me the bear market has to start right now. If you're looking at structure, we're still extremely positive. In fact, that end of day buy was a great sign for bulls. We've had significant dips over the last couple like month or so, and they've all been bought back. So what's to say this doesn't get bought back tomorrow as soon as people wake up and forget all about today? You know, um,
Right.
there's one day's worth of action, even if we sold off hard back into today's low or whatever tomorrow, that's not going to change my sentiment. For now, the structure is still bullish. We're still trending higher. So many people bought this dip today thinking exactly what I'm saying right now. They thought, okay, this is just another opportunity to get long, right? It's a significant dip in a trend higher. Now, if we bounce up and we fail over 5,000 again, and we start to kind of build some action out here, and we start to actually shift our trend, yeah, I'll think, okay, market sentiment's weak. We're trending lower. But right now, there's no argument to be made that, the highs are in. Honestly, as much as I want them to be because I'm positioned short, there's just not a good argument for, okay, the top is in. And if you're basing that purely off of a chart, that's a rough way to trade. Um, if anything, I'm purely going off a trade. Like today we saw an overwhelming market wave, right? ES fell nearly 2% at its lowest, and when that happens, it's very hard to find a green stock, right? When volatility is high and the market is trending lower, and you get those big, overwhelming market waves of a down 1.5, down 2% day, you want to play downside, right? You don't want to be the guy trying to inverse the trend and catch the falling knife. So in theory, you know, short term today, yes, the market sentiment was weak. We had a weak market today, but bigger picture, the larger trend is still bullish, and one day's worth of action of a big sell off is not enough for me to say, okay, yeah, tops in, start looking for only downside, right? We'll have to see. We'll have to see, a week's worth of action, maybe another week and a half worth of action before I'd become a lot more confident to say, okay, market's looking for a correction. We're looking for another 5 to 8% lower, or whatever it happens to be. One day's action is not going to make me switch my general sentiment on the market. Granted, there was a fundamental reason why I believe, it could be, but I'm not going to sit here and say, okay, you guys only play shorts, blah, blah, blah. Right. Um, but yeah, we just need some time. We need to see how action shapes up. PPI comes out soon, and the March FOMC will be a big event. But who knows where we'll be by then, right? So there's a lot of stuff coming up, and today was maybe the first of many, or it's just another dip buy, right? I don't know yet. And so our job as traders is not to predict the future, but to simply be on the right side of risk. So for now, people who were engaging in that type of behavior bought the dip, right? And that was that end of day move we saw, right? The trend is bullish, and so most of the market today saw this major dip today as an opportunity to get long, and that's why we saw a bit of a short squeeze into the close, as everyone who FOMO'd in, was everyone who was down here chasing shorts, and at low a day, they all got squeezed out at the end of the day. So um, again, I don't know. We'll need a couple of days, but to recap, today, yes, market was weak. You don't want to fight the trend, but bigger picture, you know, the larger trend, I'd argue, is still bullish for now.
Right. Right. This-
Yeah. What about?
I guess just specifically, I guess so. The CPI came in. I mean, technically, I guess so. Time that I've learned a lot about trading. I learned most of my time has been spent on technicals, and that's so fundamental. And I am kind of still grasping everything and trying to learn as much as I can about just how all the different data just affects everything. And I understand now how CPI and everything affects it. Um, it's still what percentages kind of what is a good 3% versus I guess today, even though it was 3%, and even though like that's an overshot, it wasn't enough for the market to continue up.
Okay, so the Fed has a long-term goal of 2% inflation a year. That's considered healthy. And
Oh,
um, believe it or not, you actually want inflation in an economy. It sounds weird, it sounds counterintuitive, but you want inflation in an economy, but you want it at a safe pace. And the reason for that is think about if inflation was negative and we had deflation, okay? That is not conducive for growth in an economy. Why? If something's a dollar today, but you know in a week it's going to be 90 cents, why would you buy it today? Right?
right,
Why would you spend your money today if you know the price is going to be cheaper later? Okay. So based on that simple fact alone, inflation is a positive for a growing economy. If you're looking to experience growth and expansion, you want prices to increase. It incentivizes people to make the purchases that they want to, right? It encourages you to buy now rather than later. Okay, so from that aspect alone, you want inflation, and so that's why the Fed's target is 2% because it's not too high to where the average American is going to be stressing about it and not able to afford bills in a month, but it also incentivizes people like, okay, well, if I'm going to buy a car now, it's better that I buy it now rather than in a year or 2 years, right? So it encourages growth. That's the first thing, is you need inflation in a growing economy. The second is, you know, even though 3.1% is, it doesn't seem like much. 1%, you know, over our goal, it doesn't seem like much, but compounded yearly, it makes the biggest difference. Um, and so you think over the last few years, I think 2020's average inflation rate was 2%, 2021's was like 9%, 2022 was like 6%, and last year we got it down to 3%, and here we are in 2024, we're at 3% again. So if you add all those up, that's 6% plus 9, it's 15 plus 6, that's 21%, but that's not what it actually is. Prices are not 21% higher than they were in 2020. Compounded, prices are probably closer to 28 or 29% higher than they were in 2020, right? So it's the compounding effect that's dangerous. And so that's why we want to keep it as low as possible, but still around. Um, so basically, 3.1% is hotter than what we were expecting today of 2.9%, right? And so what that means is that we are pretty much guaranteed that we will not see a rate cut in March, which many people had gotten their hopes up about, right? And so then that's a whole nother circle conversation about why are rates good, why are rates bad, or why are rate cuts good, or why are rate raises bad, blah, blah, blah. Basically, a rate cut would be extremely positive because it would make expansion more likely. Businesses are more likely to take out loans and work on future operations. Da da da. We can get back into that later if you'd like. We can definitely go more in detail there. But for one, I think the reason why we got such a harsh reaction today is not because inflation came up super high, but simply because of the implications. The implications include the banking sector, right? For one, regional banks are very dependent on this BTFP program right now. And what that is basically providing liquidity that will be ending in March. And a lot of banks have not properly used it. And so essentially, you've got the high rates, which they're already stressed about, which is why they're already struggling with deposits and loans already. But on the second hand is that a lot of their funding is going to run dry here in about a month. Okay, and so you've got the struggling aspect of them from rates alone, and then on top of that, their funding's going to run out in a month. We're going to see so much pressure and a lot of stress on the regional banking sector. And so financials, just like we saw last year, if you remember last March when we signed this to bail out so many banks, how many, you guys remember all that fiasco. If you were here, it created some really fun trading conditions because it was really volatile and the market sold off really hard for a few days until the Fed bailed them out. But basically, if we see that again, this was the program. This was the program to save them. And if it didn't, there's no real backstop for the regional banks. What you're going to see is a ton of regional banks get shut down due to liquidity issues, and all these major banks are just going to get bigger and bigger. Now, granted, if there is a knee jerk reaction to a number of regional banks getting shut down, the big banks will sell off too, but it'll only create a bigger long term opportunity to pick them up. I'm talking about Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo's. Those guys are going to be just fine, but they will feel an impact if regional banks start to shut down, right? Um, but anyways, that's what I think today's CPI reaction was so harsh for. Is not because, oh, inflation, the average person has mostly become accustomed to the rates right now. We've had the same rates for I think 6 months. Most of the people are on board now that okay, if we want to get inflation lower, we're gonna have to deal with a year or two of shitty rates. And the average person is fine with that. But it's the average person is not looking at today's report thinking, oh no, inflation is 0.2% higher than we thought. I'm going to go broke. That's not what the average American is thinking. It's, oh shit.
Right. So pretty much this coming in throws away or not completely throws away, but kind of decreases these regional banks getting their thing due to the decreased likelihood of a rate.
No, no, no. So the rates are stagnant, right? Jay Powell already came out and said, "Hey, listen, don't get your hopes up about a rate cut in March." That was already a low likelihood. This pretty much eliminates any probability, in my opinion. I think it's all but certain we are not getting a rate cut. The BTFP funding ends no matter what. It ends in March. That's the terms of that program. We knew since last March it was going to be 1 year long. So even if we did get a rate cut, if the BTFP program ended, there would still probably be some stress. But because rates are staying elevated, it's even worse for those regional banks.
Okay, gotcha. And does any of the data today point to a decreased likelihood of a rerun of that bailout deal?
Yes, I just saw something. Someone posted some data on Twitter that I was reading through just literally an hour ago, and I wish I could find it, but I think it'll take up too much of our time. Can you send me a chat in Stock Talk real quick and remind me about it? Because I'll post it here in chat after the session. But yes, there is. Bank credit is like at all-time lows, and essentially it's like, you know, essentially the only times we've seen it this low are the times that we've seen some of the biggest recessions in the past 50 years. So, but but yeah, it's really something that I'm not seeing a lot of people too concerned about, which is concerning. But Llama, I know you and El Sucio have been going back and forth about this. You got any input here?
No, I'm pretty much the same as last week. I don't know if I'd like to think at 40, but I'm right there with you.
Well,
But I mean, it was down 5% at one point today, but it right back up with S&P once things started going back up. So I
what
don't know what to think.
what did? What are you talking about? A stock?
Carry the small bank regional ETF.
Gotcha. Okay.
It's down like 5% today, but other than that, I pretty much agree with your sentiment. I mean, it just all seems too gazy to me at this point. So yeah,
Time will
kind of with
tell.
you.
Time will tell. Time will tell.
Yeah.
I think next month a lot of shit gets shaken up. Now that I've really looked into it with you and Susio, it makes a lot more sense, and I see why Susio has been calling from the rooftops about it.
Yeah, it really makes no sense. Seems like any time we like, where's the talk of that? Like this week, we just had a pretty decent, someone called correction starting today. And the small regional banks, I don't see shit about it on Twitter or anything. And most of them were, not down too bad today. So yeah, I think it's a time will tell type of thing, man.
Definitely, definitely,
Yeah.
man. Well, shoot, we will see. Personally, I'm long term short. I don't hope anything really breaks, but I do hope we see a correction. If it has to come from some fundamental catalyst, so be it. But anyways, you guys got anything you want to look at?
I just asked one question. I guess directly related question earlier.
Sure.
With first ex dividend, I think eight point first stated. How do you anticipate that first ex dividend date impacting their stock price?
It won't much, to be honest. I don't think it will.
Yeah,
The thing about introducing a dividend is it directly adds to a company's intrinsic value. If you look at every single valuation model, whether it's a dividend growth rate, um, if it's a free cash flow model, every single one of those takes into account the dividend aspect of it. Okay, so there are people who have never owned Metastock in their life who, after that announcement was made, went out and bought some. Okay, and are planning to hold it long term. Believe it or not, even at these prices, buying in now, it doesn't make much sense, but people do it. I know many people who won't pick a stock, won't hold a stock unless it pays a dividend, right? So they don't have any Amazon, they don't have any, Tesla, they don't have any AMD stock. Or wait, AMD might pay a dividend. Am I silly? Yeah, AMD doesn't pay a dividend. There are people who don't own any of these stocks for the simple fact that they don't pay a dividend. So, yeah, if you look at any growth model or any valuation model, they all take into account a dividend. So, the simple fact that they pay a dividend, I would not imagine that this thing sees a sell off immediately following the dividend. And if it does, it's not because of that. It'll be because the general market is selling off, or there was just some other, reason for it. It it's not going to sell off following the dividend. People are going to hold through it and continue holding through it till the next dividend because that's who added. If you bought it for the dividend, you're not buying it to make 50 cents on a $400 stock. That's not, that's not why you bought it. You're buying it because it's going to continue to pay you long-term income. So again, I don't think it's going to get a reaction immediately following that dividend.
well, thanks.
Does that make sense?
Yeah, makes sense. I guess, from the other side, given today's, you know, percent drop, do you see people trying to go back in for specifically that dividend for people that maybe it got too high too quickly for them post earnings?
Well, their ex-dividend date's already passed. I don't think if you bought it today, you'd get this dividend. You'd get the one next quarter. You have to be holding the dividend for a certain period of time to be eligible to receive it.
I thought the ex dividend for Meta is the 21st of February.
No, that's when they pay it.
Oh, that's when they pay it.
Yeah,
Got it.
that's when you'll receive your dividend. But I believe if I'm not mistaken, you had to be holding before the earnings to get the dividend. Let me see.
Yeah, you hold before something, and then you can 26th of March is the next, or the first dividend payout, or the next dividend payout. I don't know any, so I'm looking out of my ass. Something like that.
I'm trying to find when the
Now for next dividend payment date is on March 26th, 2024. Meta platform shareholders who own Meta shares before February 21st will receive a dividend payment of only 5 cents per share. Yeah, that's what I mean. So you have basically until the 21st of February to purchase the stock in order to be eligible for the dividend.
Yeah, you're right. That is weird. Typically this marker is when they pay it. But yeah, I just looked it up. The payment comes on March 26th. Okay. Yeah, you're right. So yeah, so long as you buy it before this, you're good. That's that's weird because this isn't typically what this symbol is down here. Typically, so if you look at Nvidia, for example, just whatever, like this is the day 12/5. That's the day you get your dividend. This is not the X dividend date, which is odd. So I don't know why Meta's is displaying it like that. But anyways, yeah, I just looked it up. Your dividend payout comes March 26th. This is when you have to buy before. Um, cool, cool. Yeah, but anyways, same thing stands. I don't think it's going to sell off on the dividend date or the ex dividend date. If anything, it would cause an inverse reaction. If this is the last day you can buy it before getting a dividend, I would expect if market had a perfectly flat day, low volume, I imagine Meta would probably still be green with anticipation of people looking to get in before the dividend. Does that make sense?
Correct.
Yeah, man. Yeah, thanks for stopping in. You have a good night. Anon, how's your night going, man?
Are those 1,200
I'll be pretty good. They didn't see much downside today.
What's
What are those dated for? Anon, what are the dates on those?
I'm not hating on that was legendary shit.
What is Dude, the strikes are so far. What is it? 1200? He's got 1200 strikes. The fact that there's actually like good volume on this is absurd to me.
Dude, I know. People are insane.
What's going on, Shobo Genzo? I'm not sure how to pronounce your name. How you doing tonight? Hey, what's going on? We've already covered a good amount of stuff. But you're fairly new in here, so I'll debrief you real quick. We've covered so far the CPI report. We went over the meta chart a little bit and the dividend. Kind of gave some expectations for the next couple days, but these sessions are member led, So if you have any charts you want to look at or any general questions, feel free to shout them out. Right now we're kind of just looking around. A buddy of ours has some pretty absurd Nvidia positions open, so we're just kind of looking at those contracts. But yeah, if you have anything you want to check out, we kind of hit a lull period in the session, so just let me know. I'm glad you decided to stop in.
Thank you.
Yeah.
Um, just to see up alerts and you're really good.
I appreciate that, man. Did you follow from another server, or have you just been watching the last couple days in here?
Yeah, actually, I'm punching on that.
Oh, okay. I appreciate that, man. Well, hell yeah. I'm glad you've enjoyed the analysis. But this is, as you can tell, this is my home server. This is where I spend my days in voice chat, and this is where I put most of my focus. So if you are looking to learn directly from me, this is the place to be. But I hope you enjoy your trial, and make sure to stop into voice chat during the day, and that's where we're calling out positions. That's where we're talking our ideas and discussing. It's a lot of fun, and it's very inviting and engaging. So definitely make it a point to come in during the day if you can.
All right, let me just ask you a question. I'm going my own server right now. Add your bot to this. You
Yeah, if you want to hire me, just shoot me a DM. Send it to the Waxu account. This one's my streaming account. This Waxy account, don't send it to this one.
I will eventually. Thank you.
Yeah, sure. I'll just shoot you a DM real quick. All right, cool. All right, Susio, how you doing tonight, man?
All right, man. Just got a haircut.
Very nice. Looking handsome.
Always.
Nice. Nice.
Handsome and angry every day.
Well, hey, listen, you missed it. We spent the last probably 20 or 30 minutes talking about your main thesis, the zero rate cut and now BTFP program ending. I see the vision now. Now that rate cut is pretty much off the table for March, I understand the stress that regional banks will be under, and I am on your side. Okay, I will not let Huji or Mo or any one of them down talk the thesis. Okay, I understand it.
Always someone of my favorite about the market is to try and unravel puzzles and go down rabbit holes that can often lead to losses because being early is being wrong.
100%.
Looking for the first signs of it, right?
100%.
And that's what I'm seeing. Trying to go back to is tough because like the ones that went under those charts don't really they're not really there anymore. But trying to go back to what things were like in the weeks before the March crisis.
Okay.
Because I remember we were seeing like a lot of like in Silver Bank or whatever it was, SIVB, like there was a lot of weakness. It had been fading for a long time. Then it had like some squeezes higher. And like it wasn't a crisis, right? Like people were just trading it off the chart. They weren't trading off any fundamentals. And like it seemed overdone. It seemed heavily shorted. But it was because people, smart money that knew they were positioning ahead of time. And then, people would come in and chase and pop it up. And that smart money would take some profits and re enter and add to their position. And that's what I'm looking at now with things like NYCP and COLB and VLY, which I entered today. It's like see them crack levels, and some of them are cracking levels that they haven't seen since March and even below those. Since that last crisis, and then like NYCP did the other day, right? Like it pops up, it squeezes back up because the insider buy, and everyone thinks, okay, everything is fine. And I moved away from watching it because now it's back up and that fear is gone. But I don't take it off the watch list because it could just be, people are still pre-positioning and waiting for that shit to really crack. Being early can be being wrong, but in terms of a trade, but it doesn't mean you're wrong in terms of the thesis. And I'm seeing wobbles, and I'm looking for them to spread to other banks and other names. And I think once it's widespread enough and we're close enough to the actual expiration of the BTFP, then we see what we're really going to see. So it's interesting times.
I think it won't be long after the BTFP program ends that we start to see a lot of regional banks see the stress. Everyone's just pushing it off right now.
Whether it will be after or if it will start before.
I think people are going to start kind of front running it, maybe a week or two ahead.
Yeah.
But once we actually start to see, one or two names go under and it kind of dominoes, then in that case, you know, that's when I would expect the general market to kind of see that impact.
Yeah. Market's not going to overreact to the canary or if they will start to push.
Exactly.
So, so talk to me about like and wax you too. It's like the KRE. Like I feel like we just have this perfect fucking indicator right in front of our eyes. We have the tape to see if prevails their positioning ahead of time. Like how much can we read into the KRE, or how much should we not give a shit about the KRE? Because I'm just a chart guy, but like it's like I started with. It's like it seems like we have the tools right in front of us to kind of sniff this out. And We know the date that it's, kind of creeping up on here, March 11th. Why not reposition, Alice? And it's like, I know you and I have talked on the side, and like, you're not touching shit unless you see pre-March, signs. But, just talk to me about that because, like, I think that we could take advantage of this ticker that's right in front of our eyes and really short the shit out of it before things, start really collapsing and kind of go nuclear.
Well, I think just as we said, a lot of people will probably begin to start front running it here in the next couple weeks on KRE. I think your best bet is if you're actually convicted in it, don't go for the nuclear measure and try to catch KRE going to zero because it's not going to happen. If anything, they can always bail them out again. If anything, capitalize on the volatility that'll be brought from a number of regional banks shutting down on on the general market, right? So the biggest name, if you're looking at an index that'll be hit, financials are in the Dow, right? So the Dow and ES would be the indexes that you'd probably want to short. And again, don't expect anything to get cut in half or anything like that. If you want to, play some lottery tickets, maybe grab some few month out swings on like some regional banks that you are not so excited about. But that's like, shooting a shotgun into a pond, right? Maybe you hit something, maybe you don't. But, if anything, you can look at some of their holdings and if they're high risk, then maybe take a shot at it. Don't try any of the big banks. The big banks you're just going to waste your money. But maybe with some regional banks, if you do happen to hit one, it's one of those trades where it's like you could open up a 250 $500 position on 10 or 20 different regional banks. They can all go to zero, but if one of them hits, it's gonna you're gonna make bank. You know what I mean? If that shuts down and it gets a mass liquidation, just as we saw with, what was Silicon Valley Bank's ticker? Do you guys remember? SVB, that's right. Oh, yep. And it's not even listed anymore. But anyways, what did that stock go to? Wasn't it like a $300 stock or something?
It was something stupid because I should type my ad.
Yeah, and it ended up being like what, $20 or something before it delisted? That's a home run. That's a grand slam, dude. That's making the Hall of Fame, okay, with options.
And then the 20s was traded down in the 20s during the front run. Then we back up to the 30s, and then when shit really got real, it got down into the teens, and then it got into single digits when the deposit run started.
Okay.
The straw that broke the straw that in SIVP, the straw that broke the camel's back was the CEO call to inspire investor confidence and saying, we're fine as long as everybody doesn't start pulling their money out. And within an hour, everybody was pulling. Yeah, and if you check the tape, he had already pulled his money out at the time that he said.
Jesus.
It was the dumbest conference call in the history of conference calls. It was shocking. I had two buddies that worked there. Not working. One still does. Yeah, one still does. Surprisingly. Wow. So what you were saying about like why not front run it? Like your idea of front running in KRE is potentially a good one, right? Um, because you're not going to be as inflated in premium, but personally for me, like I've had a lot of trades where they're high conviction trades, and I know it's going to this target. And I'm like, okay, now's a good time to get in, because we're close to that date. And then I get in, and the shit runs up 10%, and suddenly the contracts are way fucking down. And I'm like, fuck this. Maybe I was wrong, and I bail. And then it goes, reverses 3 days later, and it does the full move. But sometimes, before the drop, there's an exit pump. So I'm timing it. If you're confident in your timing and you have a strong stomach, then sure, front run stuff. But also, everybody knows this is coming. and everybody, not everybody, but a lot of people have the same lists of which are the banks with the most at risk assets, or the worst portfolios of CRE on their books, or this and that. And so those premiums are going to all be inflated. And so you're fighting theta without knowing exactly, is this going to happen before? Is this going to happen on the date? Is this going to happen weeks after the date? Like, when's it going to happen? So it's tough. I'm not a bank guy. I don't understand the financials as well as someone who this is their sector. This is what they do. Which is analyze these books. So for me,
Yeah,
I just got to be aware of the thesis and watch for the momentum and set my levels and look for that volatility to come in. Like, look for that momentum to come in, and then when that momentum is gone, just trade the the meat, the easy parts, because I'm not an expert enough to be first. Basically.
what I was gonna say is you can take it two ways. I would say you can do the shoot and fish in the pond type strategy, but that's high risk, extremely high reward. Or you can play it safe and do what I'm doing and just have index shorts, capitalize on the volatility that could be brought from a few names, announcing bankruptcy or whatnot. But um that's how I would approach it. I don't think it needs to be overthought. If this is something you're expecting, then position for it within risk, but don't, you know, I think KRE is probably the worst bet if I'm being completely honest.
Just because it's so propped up by bank and presumably, like, is that what you mean when you kind of say that, Wax?
Well, not only that, but it's the regional banking ETF. Like with what El Sucio said, like everyone and their mom in every major bank is going to be front running that event. You're you'd be lucky if even if you get it right, you'd be lucky if premiums even moved.
It's true. So it's mindset is still at this. I'm thinking about it, like, I'm going to try this. That's nearly impossible. So
Yeah, if
I think
anything,
bringing me down to earth a little bit there, because it's high risk, high reward if you're willing to, take the hit. But in trading banking sector, like, we hit, multi baggers on a daily basis in SPX, and you're trying to basically get the equivalent of that in a sector where shit generally doesn't move very fast and doesn't move as hard. So just size appropriately and play for risk, but keep your eyes out.
but yeah, we were talking about this earlier, and we were thinking, who knows? The move could be way bigger than any of us anticipate, or it could just be, a poof in the wind. Like it's one of those things where just time will tell. And if you want a position for it, do it, but just stay within risk and play it smart. Either play indexes or, maybe pick a few individual regional banks that you're not a fan of. Um, but I think I'm excited for it. I'm very antsy to figure out how this March 11th is going to go down. So
Max, you understand first repo market? Do you have a decent grasp on that?
yeah, let's say a decent grasp.
I've been seeing a lot of large delta SOFR trades hit the tape recently, and I don't know what to make of 'em. I don't know anything about, like, how SOFR futures trade, and what